Hello everyone, George DeSantis here with the look at the market for the week ending August 26, 2016. Let's begin by reading the disclaimer to you. And as we can see here, the disclaimer says trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. Let's begin by looking at the monthly chart of the S&P 500 as we usually do. And here's the monthly chart of the S&P 500 that we usually look at. First thing we note is that the Kalman filter is trending up and above the instantaneous trend line. The instantaneous trend line is also trending up if you look closely. Most recent bar seems to be a doji, a little bit of uncertainty. However, the parabolic is still below the month of August, the bar of the month of August, the most recent bar. There is no indication to reverse the uptrend. MACD continued to trend up from below the zero line in concert with this trend here that we're looking at. The fast average seems to be approaching the point at which it might cross over the slow average. So that would be even more bullish if we get there. And at the bottom of the chart, Elder Force is still above the zero line. So in support of this interpretation of an uptrend here. Let's take a look at the weekly chart. So here's the weekly chart of the S&P 500. We should note, first of all, as usual, that the Kalman filter is still above the instantaneous trend line. However, it got so far away from the trend line that, as often happens, the Kalman filter will retrace back to the instantaneous trend line, and it seems to be doing that here. We had two dojis, as we identified a week ago, and this past week we had another bigger body doji here, but uncertainty. In any case, it seems as though we're getting a retracement here. We will see it more on the daily chart. Now the parabolic is still below the most recent bar, last week's bar. So there's no indication to switch the direction of the trend to a downtrend. It's still an uptrend according to the MESA system with the instantaneous trend line and the Kalman filter. However, we are looking at a correction. RSI 12 is still above the 60% line, so the trend is being reinforced by this. RSI 12 typically tells us when we have an uptrend, started here when it crossed the 40% line and is now above the 60% line. MACD is still above zero, so the bulls are still somewhat in charge. There's a bit of a weakness reflected here with a little bit of a downtrend, but there's no major divergence, so that shouldn't be a threat, except for a minor correction. %R is above the 80% line, indicating that the momentum is still very strong concerning this uptrend. So the multi-chart is still in an uptrend. The weekly chart is in an uptrend and appears to be correcting, coming back to the instantaneous trend line. Let's take a look at the daily chart. Here's one of the daily charts of the S&P we often look at. This is a 930 approach where you have a 9 EMA in yellow, a 30 weighted moving average in blue. At this time, we could see that the 9 just crossed slightly below the 30, very minutely so. In addition to that, so that is signaling that we are likely to pull back even more, because that is signaling the end of this uptrend on the daily chart. Now, in addition to that, the parabolic just switched to go above the most recent bar, these last two bars, Thursday and Friday. This is a daily chart. So we just about approached the 2200 mark that we identified as a target. In fact, 2199, and the high was 2193. So we just about did that, and then we also fulfilled the target of the Fibonacci extension 1.272. In fact, we surpassed that a bit. So what appears to be happening here is that this trend has been quite strong, and now it's correcting a bit. It doesn't seem to be a major correction, but we never know. It's hard to look at what's going to occur on the right side of the screen, isn't it? In the middle of the chart here, RSI 12 is now crossed below the 50% line. So that's reflecting that weakness we're talking about on the daily chart. Williams, the pro-buying indicator, is now below the zero line here. And also percent are crossed below 50%. So correction is occurring here, in my opinion. So let's take a look at another chart. Here's the weekly chart of the S&P 500 again. This time I want to show the CCI at the bottom of the chart, Commodity Channel Index. And remember that I discussed this before and said that I usually use this to trade SSO. I buy it when it crosses above zero, and I start trimming it or selling when it crosses below the 100% line. So I did just that. I sold some shares of SSO. However, I kept half of my position. This is the weekly chart. Now let's take a look at something else. Here's another daily chart of the S&P. I wanted to show you this one again because we were in a squeeze here. The Bollinger Bands got very narrow, the distance between them. And it appears that this squeeze is being resolved to the downside. And that's consistent with what I was talking about before. It appears that we are correcting here. Okay, going into correction. So this, according to the Mesa system, which we can read here. If I click on this, you'll see that it says the market is currently in a downtrend mode. On the daily chart, the trend mode is usually characterized by erratic behavior of the phase display in the sine wave indicator. Dominant cycle may be changing. This is the first day of the downtrend. Your best strategy is to establish a short position, hold until the end of the downtrend. Well, how big a trend down will it be? That's a big question. But we do seem to be correcting. Let's take a look at something else. Here's a weekly chart of the NASDAQ composite, and as we can see, the instantaneous trend line is below the Kalman filter. Kalman filter made a bit of a parabolic move, as price made the parabolic move rather. And then we had three dojis here. This is the weekly chart. So for the last 3 weeks, we've had these dojis indicating uncertainty. The market seemed to have been, it bumped up against resistance at that 2200 level or so for the S&P, and at this level for the NASDAQ. So this is where we are. It seems that we're going to retrace back closer to the instantaneous trend line before we make another move up. So if you're holding stocks that you feel comfortable with, fine. If there's some stocks that you have a gain and you want to take some gains, like I did that last week, sometime last week, early in the week, you do that. So let's take a look at something else. Here's the daily chart of the NASDAQ composite. Now you can see that we were in a squeeze here. Bollinger Bands narrowed a lot, and since then we seem to be doing the same thing we saw on the S&P, of course, where we seem to be resolving that squeeze to the downside. Not significantly so, but it seems that way. Parabolic is now above the most recent bar, as it was with the S&P. So it's signaling that we should consider this now a downtrend. At the bottom of the chart, more important to me, Jerry Appel's sum of the rate of change just signal an end of that trend, this uptrend here. And the way I use Jerry Appel's sum of the rate of change, this is a 4% line, the blue line. When it crosses above 4%, I buy the Qs. When it crosses below, I sell them. So of course I sold the Qs last week when it crossed below the 4% line. Let's take a look at something else. And here's that weekly chart of stockcharts.com, where we see Alex Elder's impulse indicator, red, green, and blue line bars. and at the right end of the side of the chart, we can see that we're still having blue bars, which gives us the option to go long or short, buy or sell the market. Well, since the trend seems to be up, still up here, 9 above 30 and 30 above 50, it's just confirming what I'm thinking here, and that is that we're going to get a pullback, a further pullback correction somewhere between the 9 and the 30 in this case. At the top of the chart, you can see that MACD showed some weakness here recently because it makes a lower high than this. It's not a true divergence because we didn't get pulled below the zero line. That would be the classic divergence, but one can argue that it's somewhat of a divergence, I guess. So the weekly chart is that uncertainty where we've seen it here, we've seen it back here in 14, back in 15. A number of times when we get these blue bars, we get a retracement back down to the 30 weighted moving average. And this seems to be occurring again. That's my guess. Let's take a look at the daily chart. The daily chart shows that we have those red bars now, 3 of them. So as we saw on the other charts of the S&P 500, the daily chart is now in a downtrend. However, there are a number of ways to look at that. We have MACD below the zero line, so the bulls are weaker here than they were before, when back here. The 9 is still above the 30. So technically, we could argue that we still have a bit of an uptrend on the daily chart. However, we are seeing a correction, no doubt about it. I'm repeating myself here a lot, but let's take a look at something else. Here's a chart we've seen before. It's a chart from stock charts as well, and it shows us the percentage of stocks of the S&P 500 that are above the 200-day moving average. And as long as it stays above 65%, and of course this is a weekly chart, as long as it stays above 65%, we may be safe to say that the trend is still up and it's not in jeopardy as yet. Let's quickly summarize. The monthly chart is in an uptrend. The weekly chart is in an uptrend. The daily chart is showing, of both the S&P and the NASDAQ, are showing weakness with the likelihood of a further correction this coming week or next couple of weeks. But the longer term trend doesn't seem to be threatened at this time. Have a nice weekend, and we'll try and do this again next week.